We've been through a lot in the past few years, but now it's time to grow. This means that organizations need to refocus their energy on both short-term and long-term growth strategies. But in any economy, sustaining double-digit top-line growth from your core business is a difficult task. Take a typical mid-sized organization we know. They're aiming toward $3.2 billion in annual revenue by 2015, which would require annual growth of about 10% over the next several years. If their core business doesn't evolve, they won't hit that goal until 2020, 5 years too late. Core businesses wear out. They can't grow fast enough to meet aggressive growth aspirations. To generate sustained growth, the core must be rethought and rejuvenated. Some companies, like Apple, HP, and IBM, have undergone rejuvenation and catapulted to the next level. Other companies, like Xerox, Polaroid, and Palm, have not. It takes a balanced strategy of investments to defend the core, grow the core, and reshape it to unlock new growth. For most businesses, the immediate priority is defending the core. This involves a variety of both go-to-market and internal activities to preserve and ideally add share in core markets, while driving down costs. Layered on top of that is growing the core, either through geographic or adjacent market expansion, or through product extensions and new offers. The third layer is reshaping the core. This layer requires seeing around corners to find opportunities that fit the nature of the core business, but have the potential to expand it in new and novel ways. The key is determining the right new businesses, nascent markets, or disruptive technologies to invest in today to create sustainable, long-term growth for tomorrow. Let's look at Telular, a company market strategy group assisted in achieving their growth goals, as an example. For almost 20 years, Telular's core business had been built around their innovative Telguard wireless alarm system. If an intruder triggers an alarm in your home or business, Telguard sends the alert wirelessly to a monitoring center. It works even if the phone lines to the home or business are cut or lost. In 2008, with new management and a new CEO, Joe Beatty, Telular began to actively evaluate how to rejuvenate this very successful core business. One major option was to focus on expanding and innovating in the security industry. This was an industry Telular knew very well. It was sizable, and it offered strong penetration upside. Another option was to focus on an emerging, high-growth market in M2M, or machine-to-machine communication. M2M is about enabling the flow of event or performance data between one machine and another, typically over a wireless connection. Telguard was a form of M2M monitoring, focused on security, but many non-security M2M applications could be explored. In effect, Telular had to decide whether to rethink its core in terms of industry focus, security, or in terms of its core competency, event monitoring. It chose competency. Once the strategic decision was made to focus on M2M as the way to grow Telular's core business, events moved quickly. Telular entered the storage tank monitoring market, which is rich with many different vertical submarkets, from agricultural chemicals to oil and petrochemicals to water treatment. Telular now thinks of itself as an innovative developer of machine-to-machine and fixed wireless products that drive subscriber growth and recurring revenues. They've grown their core by expanding into the M2M marketplace with the new TankLink tank monitoring solution. Since making this strategic move, Telular has seen their stock price almost double. They've declared not only a one-time special dividend of $1 per share, but a 10-cent per share quarterly dividend. The new business model has created plenty of cash to fund growth and to reward Telular shareholders for their loyalty.
When I joined Telular a few years back, we had a great position in our core business, Telguard, but we also wanted to really focus on trying to add other lines of business and grow that way as well. We brought Market Strategy Group in to help us. We looked at size of markets in different countries, size of markets by type of service offering, and also aspects of risk, right? Trying to size the risk side of the equation. Who are we up against? How big are they? How strong are they? How many of them are there? We looked at our competencies. What are we good at? We're good at designing inexpensive but well-functioning cellular electronic devices. We're good at managing and reselling cellular data transport. And we're good at catching data when it comes over the air, processing it on behalf of our customers. So those are our competencies. That's what we do in security. In that case, it's security electronics, security alarms, and passing that along to our customers. And for machine-to-machine tank level monitoring, it's exactly the same. The expand is worked out. We did an acquisition to get into the tank level monitoring space, and that ended up working as well. In fact, to the point where we did an add-on acquisition and really have that profitable. So from 2 to 3, the stock's been 6 to 7 since those actions. So now we have a valuation that I think is in line with the operating results. So everything's in a harmonious position at the moment. Using the model, defend, expand, reshape, it helps us kind of stick to our business really well, and at the end of the day, I think that's what made the difference for us.
At Market Strategy Group, we're proud to count Telular as a client. As a growth advisory boutique, we help clients build and realize balanced growth strategies. Contact us. We'll look at your situation and help you determine how to meet your growth goals in a balanced way.